Maybe they'd rather listen to that.
Thank you. Ladies and gentlemen, good morning. I'm Alex Pollock, now of the R Street Institute. It's a pleasure for my colleague and co-organizer Desmond Lockman and me to welcome you to our conference on how to address Puerto Rico's debt crisis. A crisis, as you know, which far surpasses in size the city of Detroit's bankruptcy, the current record holder, as the largest municipal bankruptcy in history. There are three challenging levels of the deep Puerto Rican government financial problems, it seems to me. First, there's the imperative to bring under control the Puerto Rican government's disastrous finances. Here, I believe an emergency financial control board is required along the lines of what was done for Washington, D.C. 20 years ago, or New York City 20 years before that, and in many other cases. Of course, we can give the board a politically friendlier name, but that won't change the task. Second, there is restructuring the complex web of the Puerto Rican government's debts, which cannot be paid as agreed. How do the inevitable losses get distributed? Puerto Rico's debts include its insolvent government employees' pension fund, adding together the $71 billion or so in explicit debt and the estimated $44 billion in net pension liability gives us a total to contend with of about $115 billion, a formidable sum. That's what we have to work on. What's the best way to achieve restructuring? How does it relate to the control board, and does it take bankruptcy? Third, can the struggling Puerto Rican economy be reformed from its government-centric welfare state subsidy-dependent model to a successful market economy? If so, how should that be done? The expert members of our panel are going to discuss their diagnoses and prescriptions for Puerto Rico's daunting debt, financial management, and economic problems. We are indeed fortunate to have an outstanding panel to help us think through all this. Let me introduce them in the order in which they will make opening comments. Our first speaker, Ann Kruger, is a senior research professor of international economics at the School for Advanced International Studies at Johns Hopkins University, senior fellow at the Stanford Center for International Development, and senior fellow at the Hoover Institution. She was previously first managing director of the International Monetary Fund and has published extensively on international finance and economic policy, including co-authoring Puerto Rico, A Way Forward, a study of the debt crisis and economic challenges of the Puerto Rican government, which was published last June. Next will be Brad Setzer, who's a senior fellow at the Council on Foreign Relations, dealing with international macroeconomics, global capital flows, sovereign debt restructuring, and the management of financial crises. Brad served as the Deputy Assistant Secretary for International Economic Analysis in the U.S. Treasury, where he worked on Europe's financial crisis and on the Treasury's response to Puerto Rico's debt crisis. He's the co-author of Bailouts and Bail-ins, Responding to Financial Crises in Emerging Economies. The way things are going, Brad, it looks like you're going to be plenty busy with financial crises in emerging economies here. Our third speaker will be Tom Mayer, who is co-chair of Corporate Restructuring and Bankruptcy Department of Kramer Levin, working on restructurings of distressed businesses on behalf of creditors and bondholders. He's represented creditors in the notable bankruptcy cases of General Motors, Chrysler, Jefferson County, Alabama, and the city of Detroit. What do you do for fun, Tom? And he is the senior partner on the Kramer-Levin team representing holders of more than $10 billion of bonds issued by Puerto Rico. Tom is a fellow of the American College of Bankruptcy and will help us think about whether bankruptcy makes sense for the government of Puerto Rico and its various parts. Then we'll hear from Daniel Hansen, who is on the geopolitical risk team at Heights Securities, a Washington, D.C. capital markets firm that advises clients on political and regulatory issues, including many clients with diverse interests in and risk exposures to Puerto Rico. Daniel's written and worked extensively on the Puerto Rican debt crisis, as well as on the euro crisis, energy-related instability, and sovereign wealth management strategies. Daniel's also an alumnus of AEI, which is pleased to welcome him back to be on this panel. And our final speaker and co-organizer of this panel, Desmond Lockman, said to me last November, "Alex, we have to do a conference on Puerto Rico in January or February. The issues will be hot then." As is so often the case, my friend Desmond was right. Desmond's written extensively on the global economic crisis, the U.S. Housing market bust, the U.S. dollar, and crises in the euro area, especially the Greek debt crisis, and on Puerto Rico, as he analyzes the global macroeconomy, currency issues, and international debt problems. Each panelist will speak for from 10 to 15 minutes, after which we'll give them a chance to respond to each other or clarify points. And after that, we'll open the floor to your questions, and we will adjourn promptly at 11 o'clock. Ann, you have the floor. Great to have you with us.
Thank you. It's a pleasure to be here, although it would be even more of a pleasure if the situation in Puerto Rico were better. It's not a happy circumstance at all. Just a little bit of background, which I do think is important in understanding it. Puerto Rico is a territory of the United States. They've had, I think, 3 by now elections or referenda in which the question has been, do you want to remain in current status, do you want independence, or do you want to become a state? Status quo has always won so far. They do have a constitution approved by the U.S. Congress, which regulates the action of their Congress. They have their elections on the same cycle we do. Puerto Ricans are U.S. citizens. They are, in fact, on the U.S. dollar, which is important because it reduces their room for some kinds of maneuver that other countries or other entities might have. And at the same time, they get some advantages from that and some disadvantages. Puerto Ricans are U.S. citizens. Anyone can hop on a boat or a plane and come legally into the United States and seek work the first day. No restrictions. And all of those things are, in many ways, advantages. And as I said, they voted to keep the status quo, at least so far. But there are also some disadvantages. And some of those disadvantages have, I think, finally come to bite along with some other events. They have 3 problems, and I want to stress that there are 3 because it's too tempting to focus on 1 or 2 of them and ignore the other. The first problem, which was already mentioned, and this is in no order of importance, they are all important, is debt. They are up to the limit where they cannot borrow anymore, and as I said, they are in the Second Federal Reserve District, and as such, they have the dollar, so they can't exactly print money, as some other countries have been known to try for a while at least. In addition to this, that's the first problem. And of course, for a while, they had triple tax exemption: no state tax, no federal tax, just if you lived in Puerto Rico and you had income from Puerto Rico, you paid no tax on it whatsoever. If you issued a bond, there was no tax on that, et cetera, et cetera. Second problem is, of course, and I'm going to go surprise you now, because the second problem has been their domestic policies. If I were to go there and not look at their fiscal policies at all, but look at them as I have looked in the past at other Latin American and South Asian countries, they have done to themselves what many other Latin American countries and many Asian countries did or used to do and sometimes still do in terms of regulations and things that restrict economic activity in ways that are inimical to healthy growth. And that's the second thing. The third thing, of course, is a fiscal deficit. The fiscal deficit has been running probably since 1996, with I think 1 year where they made a mistake and ran a small cash balance surplus. But other than that, it's been a deficit. Part of the reason has been that they have indeed over-anticipated their growth, or more accurately, they've under-anticipated how much they would shrink. They have thought it was a recession, and they tried fiscal policy. Now, the proximate trigger for this recession, which it isn't. It's stagnation. It's sinking. It is not something where you're just going to bounce back without doing something about it. But the proximate cause of this was that in the late 1970s, when Puerto Rico was in some degree of difficulty, the Congress, in its wisdom, passed a law exempting corporations that moved some of their manufacturing activities to Puerto Rico from U.S. corporate taxes. Well, now, what kind of firms do you get when you do that? You get high value-added, capital-intensive firms. You don't get unskilled labor-intensive firms and so on. And the companies that took advantage of it were largely pharmaceuticals, because they could pay Puerto Rican taxes instead of U.S. corporate taxes. And it was, the inversion that we now hear everybody worrying about was nothing contrasted with that particular tax break that the companies were given for moving there. They duly moved there with their high value-added activities. They did hire some people, of course, but they were normally the skilled workers. And that went on for about 20 years until in 1996, I believe, for reasons that if I ever knew, I've forgotten, the Clinton administration saw fit to start phasing out those tax breaks, which ended in 2006. So after all these companies had moved in, established plants there, some are still there, but some have moved out. But that clearly contributed to a failure to invest more, and it certainly contributed to the moving out of some of the firms. Now, even during that period, and this is important, the Puerto Ricans, while they had a tax code, and if you look at their tax code, their rates are perfectly reasonable. But if you look at what was paid, it looks very different. The corporate tax rate looks as if it's 30%. Average taxes collected from corporations, last I looked, on the number they gave me was 4%. Why? Because, as I said, it's been a Latin American-style economy in which a firm comes, and since everybody knows this happens, everybody does it. You go to the right office in the government, and there is one designated for the purpose, and then negotiate a deal in which, okay, yes, you'll come in, we'll give you so much land, we'll give you so much of a subsidy on your hotel or whatever it is, and in addition, your tax rates will be only so much for the next however many years, and usually those number of years are not short. So they had a tax code on the corporate side, which has brought people in, gave them some revenue while they stayed, but obviously once 2006 or even 1996 came about and the intention was known, that's as a source of growth stopped, but they thought it was recession, and so they kept over budgeting, because when your growth rate goes down, your expenditures go up and your tax breaks fall. That's only one of the reasons, but it's certainly one of them. And they've run a fiscal deficit every year. They had triple tax exemptions, so they were very attractive municipal bonds until, of course, the party was over. And now, of course, they can't float anything. And in the secondary market, they're going at quite a big discount. So right now, that's not a possibility. The thing I want to stress more than anything else, because over and over, everybody hears, about the fiscal deficit. Everybody hears about the debt. Is unless they can restore growth somehow, it doesn't matter what you do, it's a big problem. It's more than simply the debt. It's the pensions of those who are now working and who are or will shortly retire. It is all kinds of other things. It's any investment. They've got to make investments in their electric power company, for example, although at the moment they can't because that's going bankrupt. It's going bankrupt in part because they've got excessive employment, because they've got incompetent people there. And I sat down with the person who's in charge of restructuring and heard some horror stories. As how, today I was only able to save $30 million, but I did find 8 employees over there who hadn't been in for a year. This kind of thing. But in addition to that, they have some other very genuine things. First off, all but a little bit of their electric power is based on oil generation, oil as a base for the generation. And oil in is high priced anywhere, but was high priced anywhere. But in Puerto Rico, it was even higher priced because of the Jones Act, which meant it got shipped from the U.S. and it got shipped in bottoms that had to be U.S. bottoms, and their shipping charges are higher. Who had lower ones? Well, lots of countries shipping from the same port in the U.S., the same stuff, lower shipping charges, for example, to Dominican Republic, which is right next door. No difference in distance, really. The shipping charges are, of course, much higher. There are other disadvantages like that. The main one I'll mention, everybody gets mad at me for mentioning, but it nonetheless is a real factor, and that is that Puerto Rico is now subject to the U.S. Minimum Wage Act, which right now is $7.25 an hour, but if I read politics at all correctly, it's going up one place and then another, and pretty soon we'll be up to 10 or something. Minimum wage in Mexico is about $2 an hour. That in the Dominican Republic is less than $1 an hour. Suppose you want to build a hotel on a beautiful sandy beach. And you can build with construction labor at $7.25, or you can build with construction labor $1, let's say, or $2 or whatever. And in addition to that, you can get the electricity at about half the price, et cetera, et cetera, et cetera. You might build some high upscale stuff in Puerto Rico, but you're not going to build anything mass market. You just can't. And that's partly our regulations. To finish off quickly on the U.S. side, the other thing we've done is we've mandated, for example, the Obamacare for them. They get a block grant. If they got the block grant as on the same formula as U.S. states, they'd be getting quite a bit more money, about 0.5% of GDP. It's not small. And even that is going to run out, I think, in 2017 unless something is done. And I think it will be, but unless it's done, that's going to be even worse in that regard. And they're required to pay these wages, even though, of course, health costs are in some sense lower in some ways, but on the other hand, they're required to pay that amount of compensation. For Puerto Rican doctors, the same as mainland doctors. And so then they get less reimbursement. So it's sort of, you can't have it both ways, what we do. I don't think you can get rid of the minimum wage, but there are all kinds of things they could do, as, for example, have apprenticeships, have starting wages, any minimum wage increase on the mainland, pass some provisos saying that Puerto Rico's minimum wages do not have to rise until, for example, Puerto Rico's average wages, or average per capita income is, let's say, half that of the poorest U.S. state. Would that be mean? That would be quite a while, because Mississippi is the poorest U.S. state on the mainland per capita. And on current estimates, of course, Puerto Rico will never catch up because it's not growing. But even if it grows at the U.S. rate, it would take a very long time. So the minimum wage is a real deterrent. And a lot of people say, isn't it terrible Puerto Rico has an unskilled, informal sector? Of course they have an informal sector. They're eligible for food stamps. They're eligible to U.S. housing subsidies. They are eligible for other things. One of the Puerto Rican economists I met had calculated that if you were the head of household of a family of 3, and you worked at the minimum wage, $7.25, and got the benefits that go with that, your average take-home pay would be on the order of $1,100 a month. If, on the other hand, you took the welfare package, housing and food and what have you, health, $1,700 a month. Which would you take? Not only that, many of them will take the minimum wage package. I met people who worked for them in the household of a maid or something for 2 days a week, would not work full time so that they could stay on welfare, because the welfare was more valuable to them than their wage. And then everybody says, isn't it shocking? Puerto Ricans are so lazy that their labor force participation rate is 40%. Guess what the U.S. rate is? 62, 63 now, and we think it's low. Well, if you just got as many, the Puerto Rican participation rate up to 60%, you'd be increasing the working labor force by 50%, from 40 to 60. That's huge. And yet, that sits there as another obstacle. Now, getting to Puerto Rico, and I'll try and finish on this quickly. The part that is hard is that Puerto Rico has shot itself in the foot by making many of these things worse. There's a minimum wage mandated by U.S. Congress, but the Puerto Rican Congress has said, okay, but everybody has to get a 13th month wage in December. Everybody has to get such and such a holiday. Everybody has to have such and such a sick leave, etc. And by the time you get done, it's pretty clear that there's at least 15 or 20% loaded, on top, at least, I said, on top of what's mandated by the minimum wage and so on and so on. Nobody can work more than 8 hours in any 24-hour period, which means a restaurant owner can't hire somebody for the night shift and the next noon shift, etc., etc. It just doesn't work. There are too many of these things. The government is dysfunctional in many, many ways. There was one point at which we were looking up for a particular number, and we got it by going to the person who kept the numbers in the government, or so we were told. A couple weeks later, that person called one of my colleagues, not me, and asked, where did you get that number? To which the answer was, from you. Oh. The state of the statistics office is not good, and it's not all their fault. They're a very small budget. There are other things. They subsidize the University of Puerto Rico unbelievably, and many of the Puerto Ricans then, of course, fly to the mainland and work here. Orlando is now the second largest Puerto Rican city around, after New York, not after San Juan. And on we go. So Puerto Rico has 3 problems. It's got to clean up its own act. It's got also to do something on the fiscal side, and there has to be something on debt restructuring very quickly. On debt.
1 minute for
Oh,
that.
2. Now 2.5. Okay, but the problems in a way have to be solved, and they have to be sorted out together. Doing one or two of them won't work. On the fiscal side, there has to be some correction, and it has to be more by way of governmental efficiency, cutting expenditures. Raising taxes will just encourage more out-migration. 2% of the labor force left last year. 2%. Nobody except after war that I know of has ever had a number like that and tried to get growth going. And they're leaving because they got better opportunities on the mainland. Okay, so that's number one. They've got to clean up their act, and that has many parts. Getting the government so that they can get their fiscal accounts on time, know what they are, et cetera, is part of it. Getting rid of some of these laws, getting rid of all this ad hoc will deal with each company individually is part of it, and on I could go. But that's number one. Number two, right now, Puerto Rico is not subject to Chapter 9 of the U.S. Bankruptcy Code. There are people here who know more about that than I do. But what I do know is that when you have lots of different entities within a government that basically have debt, and you don't have any orderly procedure for sorting it out, the lawyers will have fun, but nobody else on either side will. And that's true, I think, of the creditors in this case as well as the debtors. Just leaving it so that each one can run to the courts will keep a mess going for several years, and then it won't matter what else the U.S. Congress does or what else Puerto Rico does. The downslide will continue and get worse, and it cannot get much worse for very long. And of course, the third thing is that there does have to be the measures for growth. So you've got the fiscal policies have to change, and the government has to change. You've got the getting out of the domestic economy, getting a level playing field, the same advice as we give emerging markets and stuff, and then that. The last word is that, yes, there does have to be a control board, but a control board has to have something meaningful to control, and unless there's something on the debt side, the control board can't do it because it'll be decided in the courts. Thank you.
Thank you, Ann. Brad?
So I thought I would provide 3 observations, which to some significant degree build on Ann's observations about the nature of Puerto Rico's problem as I see it, and then provide with a little bit more detail the 3 elements that I think are necessary to a viable long-run solution to Puerto Rico's problems. The first observation on the nature of the problem is building on what Ann noted. Puerto Rico has been in a sustained economic slump. It has experienced a lost decade. If you compare the past decade in Puerto Rico to emerging market crises, it's not a very favorable comparison to Puerto Rico. GNP is down over 10% since 2005. Employment is down much more. Puerto Rico is already, by a significant degree, the poorest part of the United States. Median family income is a little under $20,000, which is about half that of Alabama or Mississippi, and that gap is growing over time. Now, the conventional account for the source of Puerto Rico's downturn heavily emphasizes Section 936, the provision in the tax code that favored pharmaceutical manufacturing. I think that is a partial explanation. Puerto Rico also experienced a very significant real estate cycle where real estate investment surged in Puerto Rico at the same time it surged in Florida, and a real estate boom turned into a real estate bust, and that created a legacy of bad loans in the banking system, and that in turn led to a prolonged period of deleveraging. I emphasize that only to note that the sources of Puerto Rico's difficulties are not simply a function of changes in the U.S. tax code. And if you look at the fall in residential investment, it goes from 4% of GNP to 1% of GNP. And with ongoing outmigration, you're losing the potential to turn that around. So there is a deep problem and a problem that has some risk of compounding rather than getting better. Second observation on the nature of the problem is that Puerto Rico suffers from unquestioned weaknesses in its fiscal institutions. Ann gave plenty of anecdotes, but I want to be a little bit more precise if I could. If you look at non-interest expenditure in the general fund, And I recognize, and Anne illustrated well, that there are expenditures outside of the general fund. Non-interest expenditure in the general fund in this current fiscal year is about $8.5 billion, a little less. If you go back 10 years, non-interest expenditure in the general fund is also about $8.5 billion. And as a share of GNP, I'm sure many in this room will think it's too high a share of GNP, but as a share of GNP, spending in the general fund has fallen if you exclude interest. Point being that the core source of Puerto Rico's fiscal difficulties has been the systematic overestimation of revenue in the budget, and then a failure to come close to delivering projected revenues, which leads to persistent budget shortfalls. And those budget shortfalls have been in turn covered, when possible, through borrowing, and when not possible, by not making payments on debt owed to the Internal Government Development Bank, and above all, by not making needed contributions into the pension system. Third observation on the nature of the problem, which just draws a little bit and follows from the preceding observation. Puerto Rico has an unusually large, but also an unusually complex debt structure, particularly for entities which are primarily supported by the taxing authority of the Commonwealth. Why? Because Puerto Rico, as part of its weak fiscal institutions, has had a tendency to move debt service out of the budget and into other entities in order to help it meet its 15% of revenue debt service limit, which has the effect of having a lot of debt service off budget and a lot of debt service from entities which rely in some deep sense on the Commonwealth for their revenue, but are not the Commonwealth as an issuer. Now, solutions. I think any solution has to have three core components. The first is oversight, and I think there is broad consensus now that there needs to be a form of external oversight that strengthens from the outside and helps Puerto Rico rebuild its own fiscal institutions. The key question is what sets of powers should be provided to the oversight authority. And I wanted to highlight the three that I think are essential. The first is I think the Oversight Board needs to provide an independent estimate of Puerto Rico's revenues that feeds into the budget process, and an independent estimate of the amount of revenue that would be raised through any new measure that the governor and the legislature are contemplating. Second, I think the Oversight Authority needs to spell out an agreed long-term fiscal baseline that would function in much the same way that an IMF program functions for an emerging economy. It would outline targets for what Puerto Rico should do, and through the primary surplus embedded in that plan, provide some guidance for the nature of the needed overall debt restructuring. Now, that plan will inevitably be modified, but it is important to put Puerto Rico's annual budgeting cycle in the context of a multi-year plan, and important for all players to have certainty about Puerto Rico's long-term fiscal plans. Third, the annual budget has to be approved by the Oversight Board, and the Oversight Board should have the authority, if expenditures exceed projections, or if revenues, after having been independently estimated, fall short, and it becomes clear that Puerto Rico will not meet the target, to make across-the-board sequester-style cuts. I emphasize what I think the Oversight Board necessarily needs to do, in part to indicate some areas where I think the Oversight Board should not be empowered. And I know this will be controversial, but I do not think the Oversight Board should have the authority to change Puerto Rico's tax laws or to change Puerto Rico's labor market laws. That doesn't mean that I do not think that such reforms are not important. It simply means that those decisions ultimately need to be made by the elected officials of Puerto Rico, and the Oversight Board should be limited to core fiscal management. I also think it is important that before the Oversight Board exercises its ultimate authority, that Puerto Rico be given an opportunity to self-correct, to identify its own measures to address any fiscal shortfall, knowing that if it fails to reach agreement, the Oversight Board would have the authority to assure that an agreed fiscal target is met. Finally, given the complexities of Puerto Rico's debt and its debt stock, and given the magnitude of its debt sustainability challenge, before I go to the debt thing, I should mention that there is a critical need to adjust the federal fiscal bargain with Puerto Rico in two ways. One is lifting the cap on Medicaid, which limits Puerto Rico's budget support from the federal government for low-income medical care to a level well below that of the state. And if that is not corrected, will completely undermine Puerto Rico's long-run fiscal capacity. And then second, the absence of an earned income tax credit, I think, plays a critical role in the low labor force participation. We in the United States, outside of Puerto Rico, incentivize work, particularly work at close to the minimum wage, by subsidizing work. And there is a very important benefit provided through our tax system for workers who are earning around $20,000 per year, which is a lot of people in Puerto Rico who have a family. And that incentive pulls people into the labor force, pulls people into the formal labor force, and discourages them from choosing food stamps and informal work to formal work. But all those steps alone are not enough without the capacity to restructure all of Puerto Rico's tax-supported debt through an organized process that allows creditors to take decisions collectively. Let me emphasize two things. One, Puerto Rico currently pays an average interest rate on its tax-supported debt of about 5%, which is not unusually high, but its average nominal growth over the past couple of years has been about 1%. And if you know debt sustainability analysis, you know that you generally want an interest rate that is close to your nominal growth rate, not one that is 5 times your nominal growth rate. Second, the contracted tax-supported debt service over the next 5 years is about, on average, $3.5 billion, or about 5% of GNP. Puerto Rico has historically not generated any primary surplus, and I think it is unrealistic and unwise to expect Puerto Rico to generate sustained primary surpluses of close to 5% of GNP for its tax-supported debt. That implies a significant debt reduction is a necessary part, in my view, of the solution. It is sometimes argued that debt reduction on its own will not solve Puerto Rico's problem. That's undoubtedly true. But I think the opposite is also true, that without some form of debt relief and some form of debt reduction, there can be no solution to Puerto Rico's growth problem because the debt overhang will weigh on confidence and impede a needed recovery. Now, the needed debt restructuring needs to allow creditors to organize and to vote and take decisions collectively. I think it needs to provide legal breathing space because it seems to be unlikely that full agreement will be reached before the debts really start coming due in a big way in June. And I think we need to think about how 5 groups or 6 groups in particular are treated. And this will be my concluding observation. I think any realistic solution will require some form of sacrifice from all of these groups, although the type of sacrifice is not the same. The first is the constitutional general obligation bonds. There's counting those that are guaranteed, that's a little over $15 billion of the $50 billion in tax-supported debt. That subset of bonds would not be covered by standard Chapter 9, and I think a solution will require a way of allowing them to take a collective decision on the restructuring terms. Second group of debt is the sales tax-backed bonds, also about $15 billion. Debatable whether they would be covered under standard Chapter 9, but too big of a share of the overall debt stock not to be part of the solution. Next subgroup is about $10 billion in bonds which have revenue pledges, tax revenue pledges, which are subject to clawback, most important of which is highways. This group could be restructured in general using standard Chapter 9, but in some deep sense, all of these entities rely on the taxing authority of the government for the bulk of their revenue, and conceptually should be restructured in a framework that links their restructuring and their restructuring terms to that agreed by the other core groups. Then there is a little over $5 billion in debt that is appropriations backed, has a very weak set of legal protections, conceivably could be restructured without anything, but would be best restructured through an overall organized framework. Then there are two groups which are a little bit distinct and different. The pensioners, which are important, but not quite the same, but nonetheless need to be part of the solution. And then finally, there is about $20 billion in debt issued by true public companies with independent sources of revenue. PREPA, the electric utility, which I'm sure we'll hear plenty about, the water authority. Those were the entities that would be most typically addressed through the standard municipal Chapter 9. I think that standard municipal Chapter 9 can play a helpful role, but standard 9, given the complexity of the debt structure, to my mind, is insufficient to the scale and nature of the problem. Thanks.
Thank you. Tom?
Good morning. I thank the American Enterprise Institute for inviting me to participate in this morning's panel. My name is Thomas Moores-Mayer, and I'm not an economist. I've never worked at the IMF or Treasury, but I am a lawyer. I've worked on municipal insolvencies for the better part of a decade, and I currently represent funds managed by Franklin Advisors and Oppenheimer Funds, Inc., in connection with their investment in Puerto Rico. My clients invested in about $10 billion of bonds issued by Puerto Rico and its governmental corporations on behalf of over 600,000 individual retail investors. My clients are mutual funds. They are not funds that bought in a secondary market, at least not in any appreciable size. And the typical municipal bond investor who invests in my clients and invests directly in municipal bonds in general, according to the IRS tax data, the typical investor is over 65, and the typical investor reports incomes under $100,000. When you're talking about the bondholders, you're talking about 9.5 million U.S. taxpayers who invest in municipal bonds. As previously noted, Puerto Rico's bonds are triply tax exempt. That means they are held nationwide. I have never had a situation where somebody says to my clients, do you have shareholders in X? And we can't find shareholders in a State of the Union. This is a nationwide, widely dispersed universe of relatively small investors. And all of these investors bought their bonds after Congress excluded Puerto Rico from using Chapter 9 in 1984. Most of these bonds are still held by mutual funds like my clients or by individual retail investors. And it's these investors who finance not only Puerto Rico's operating deficits, but its bridges and tunnels and highways and electric company and water company and convention center. Puerto Rico needed their investment in the past, and Puerto Rico will need their investment in the future. Since, as Dr. Kruger notes, billions of dollars of future investment are still needed to convert the diesel-powered plants at the electric company to natural gas, for water lines to avoid droughts in San Juan, for sewer lines to meet water quality regulations, for maintenance of highways and bridges, et cetera. And Chapter 9 and a debt restructuring mechanism, we believe, has to be handled very carefully, because otherwise it will impede Puerto Rico's access to the capital markets, which Puerto Rico will need to grow. In terms of the excessive amount of debt, I would note, for the record, that only 2 years ago, the Government Development Bank of Puerto Rico told investors that Puerto Rico could easily repay its debts, that it had one of the lowest ratios of debt per American citizen, because unlike other American citizens, Puerto Ricans are not responsible for the debt of the United States Treasury in that they do not pay federal income tax. And if you do an apples-to-apples comparison, taking a look at total debt paid by mainland Americans, total debt borne by mainland Americans, federal debt, state debt, local debt, and you compare that per capita burden with per capita burden of Puerto Ricans, which is just Puerto Rican Commonwealth debt, since there's very little local municipal debt of Puerto Rico, you actually get a ratio that shows that the ratio for Puerto Rico is the lowest in the United States. That's not a sufficient answer to the problem, but it provides something of a corrective lens. Is there a humanitarian crisis? The Commonwealth asserts that it is facing a humanitarian crisis, but what it really has is a governmental crisis. That is an inability to make bond payments in May and July of this year, and it is important to note that this governmental crisis has nothing to do with the last category of institutions that Brad mentioned. It has nothing to do with water, it has nothing to do with electrical company, it has nothing to do with the highway company. These are three companies that, frankly, don't need Chapter 9. The electric company has a deal with its creditors. The Senate the Puerto Rican Senate passed legislation to implement it last night. And under that deal, there's a 15% cut to principal, there's a cut in interest rates, and there is a principal holiday. It saves the electric company hundreds and hundreds of millions of dollars, and it will fund the capital expenditures that the electric company needs to make to convert the diesel to natural gas. This model, by the way, is sufficiently attractive that the sewer company is looking at it. So from the perspective of the traditional Chapter 9 application to the traditional $20 billion of debt by those corporations, we do view it as a solution in search of a problem. Let me talk about what Chapter 9 does and doesn't do, and because there are a lot of myths that get thrown around about Chapter 9. First myth, Chapter 9 stays the race to the courthouse. This is misleading. We deal here with government corporations. Creditors cannot seize assets. The first bondholder to sue PREPA gets no more than the last. In fact, it doesn't get anything. Second myth, Chapter 9 keeps the lights on. Also misleading. The lights will stay on whether or not the electric company gets access to Chapter 9 because our own documents provide that the first dollars in go to pay operating expenses. Third myth, Chapter 9 helps raise money through DIP financing. That's nonsense. If there's not enough money to pay operating expenses, there's no money to pay off a DIP loan and no one will lend. DIP lenders want first liens on collateral. There is no unencumbered collateral, and you can't take away my client's collateral without violating the Bankruptcy Code and probably the Fifth Amendment to the Constitution. Fourth myth, Chapter 9 diminishes litigation. I know there's a lot of talk about how the lawyers will make a fortune. I invite the partisans of Chapter 9 to look at how much money was spent by all sides in Detroit. And Detroit is a tiny fraction of the size of Puerto Rico and involved, for litigation purposes, no secured debt. Somebody wants to talk to me about that later. I can explain what I mean. Fifth myth, Chapter 9 lets a municipality back into the capital markets. I've heard claims that Detroit has re-achieved an investment grade rating. This is not true. Detroit's debt issued under its plan trades at 23 cents on the dollar. It is junk rated. The only way it has access to the capital markets is through a state of Michigan agency that collects taxes and sends them to bondholders and never lets Detroit touch a penny of it. That's your investment grade Detroit debt. And Puerto Rico doesn't have Michigan. I guess it has the U.S. Treasury. Sixth myth, Chapter 9 gives creditors the chance to negotiate a fair resolution. Let me talk about the reality of Chapter 9. And we always fight the last wars. Lawyers fight their last case, which in my case was Detroit. I think I was reading some of Brad's work last night on the political demise of SDRM, and it occurs to me some of this is a refight of the SDRM debate that the IMF had 15 years ago. Chapter 9 gives creditors the chance to negotiate a fair resolution. This is what really happens in Chapter 9, okay? You need one class of creditors to say yes. That's it. You get one class to say yes, and then the municipality goes to all the other classes and says, I don't really need your vote. I can stick you with the least I can get away with so long as I can get the court to buy it. and all of the standards that we know so well from Chapter 11, fair and equitable, best interests of creditors, unfair discrimination, there's very little precedent as to what they mean in Chapter 9. And to give you some notion as to the play in the joints, in Detroit, the judge in charge of that case found that pension claims could get 5 times the recovery of claims that were pari passu legally because that comported with his conscience. I'm not making that up. That's in the written decision. Unfair discrimination is a matter for the, quote, conscience of the court, end quote. So that's why I've said previously and in testimony before Congress, I've said this for over a year, what the bondholders want is a vote, a real vote. Give us a vote, and given the limit on the remedies that bondholders have against any municipality, a majority rules clause, we suggest 2/3, other people have suggested higher percentages. Give us a vote. We're not interested in fomenting holdouts. We're not interested in being holdouts. As I said, Franklin and Oppenheimer are the largest creditor group at Puerto Rico. Now let's turn to the Commonwealth itself. The fiscal travails of the Commonwealth have been well detailed by my predecessors. I won't go over them, but I have a couple of other points to make that they haven't made, which is that it isn't just that Puerto Rico has done a bad job of estimating what its what its expenditures are. It's done a terrible job of actually collecting taxes. A couple of sort of factoids for you. GAO estimates that by not paying federal income tax, individual Puerto Ricans don't pay $2 billion a year in tax. With respect to on-island taxes, the island's own consultant, KPMG, suggests that if you restructured the income tax program, Puerto Rico could raise an additional $2.5 billion a year. Puerto Rico collects 56% of its sales and use tax. That's it. And Puerto Rico hasn't raised its municipal assessments for property tax by its municipalities in many instances since the 1950s. Yesterday's El Nuevo Dia reports $3.4 billion in uncollected municipal property taxes over the last 30 years. So, can the Commonwealth pay its debts? What kind of debt restructuring is required for the Commonwealth itself? Frankly, my clients don't know. We put in an information request weeks and months ago. We have still not received the information we've asked for. We are familiar with Dr. Kruger's report. We understand her conclusion that debt must be restructured. We also understand that reports are only as good as the information that has been provided, and the information that has been provided we know is incomplete, and we would like to test its reliability. Finally, with respect to the current crisis, and I would encourage anybody who knows something about this to enlighten me, because it's something I don't know about. But I'm very worried about something which nobody talks about at all. And that's the Government Development Bank. Now, let me just state, my clients hold bonds in virtually every Puerto Rican box we hold: highway we hold, sewer we hold, electric company we hold, GOs we hold, COFINAs. We don't hold GDBs, or more accurately, we hold a tiny fraction of the GDBs. So we're not involved in the GDBs. But let me tell you about the GDB, because that's the real crisis, if there is one, okay? The GDB functions on many different levels, but what it does that's most important is that it holds $4 billion of deposits. Okay? Those are not insured by the FDIC, and that's how the island makes its payroll. Come May 1, the GDB has maybe $420 million of bond payments that's due, which the Commonwealth says it can't pay. And if it doesn't make those payments, the next Friday, or whenever payday is, there's no money. Why is nobody talking about that? And when everybody tells me there's this huge crisis, and default is coming, and my God, lawyers might run to the courthouse, which we might. Why does nobody talk about the fact that come May, the island may not make payroll? What is anyone doing about that? Is Puerto Rico passing a law that says deposits have priority, which is true, by the way, in virtually every state of the union? Is the federal government offering any aid to make sure that Puerto Rico can make payroll? This isn't solved by Chapter 9. It's not solved by a debt restructuring mechanism. This is May 1. So when people tell me that there is imminent catastrophe coming forward, I'm looking, as a simple bankruptcy lawyer who learned in private sector bankruptcies, that what you care about is making payroll, that nobody's doing anything about this. If anyone has any information, I'd love to hear it, and I think that's probably a good place to start.
Thanks, Tom. And I think pointing out the Government Development Bank is central to this whole problem is certainly correct. Daniel.
I think there's a clicker for this over there, somewhere. Right there. Perfect. Good morning. My name is Daniel Hansen. I'm from Height Securities here in Washington, D.C. We are an advisory firm that advises many bondholders with different interests across Puerto Rico. We have no financial interest ourselves, but most people who are connected to Puerto Rico in some way use our research to kind of sort of stay apprised of the situation. I want to do three things. I think we've heard a lot from previous folks on the panel about where Puerto Rico's problems came from and what their ideas are to solve them. But I want to sort of maybe temper some of the discussion we've heard through discussion of three other sort of themes, right? So the first is Puerto Rico's disclosure or lack thereof and what that teaches us about their debt sustainability. The second is the pension crisis and what that teaches us about their debt sustainability. And then thirdly, the composition of the local financial system, which will hopefully explain a little bit about where the Government Development Bank is headed, maybe. So let's make a few key points about Puerto Rico's disclosure of financial data. Puerto Rico is responsible for disclosing financial statements. They're responsible to disclose their financial statements by May 1st of the year following their fiscal year, which ends June 30th. They have not provided audited financial statements since the fiscal year that ended June 30th, 2013, which means they're now 286 days past their deadline for providing financial statements for fiscal 2014. They are at least 8 weeks away from providing those financial statements per comments made by their auditor last week, which means that they are nowhere near providing their financial statements for fiscal 2015, which comes obviously due on May 1st of this year. The independent reports that have been prepared by Puerto Rico by folks like Dr. Kruger and Conway McKenzie are prepared using inputs provided by the Commonwealth. That data is unaudited and often incomplete. The experts who are providing those reports obviously are very skilled, but are constrained by the quality of their inputs. And Puerto Rico has a history of obfuscating the truth about its budget numbers. So if we're trying to do a calculation about how much debt Puerto Rico can actually sustain, but we don't know exactly how much money Puerto Rico is taking in or how much they're spending in any given fiscal year, it's very difficult to do that sort of calculation. Now, the Commonwealth's advisors are fond of saying that everyone knows Puerto Rico has a fiscal crisis, and of course that's true. But what we don't know is the scope of that fiscal crisis and what a reasonable primary surplus actually looks like. Surely we can agree with Brad that 5% of GDP is not sustainable in the current environment. But whether 5% is sustainable or 2% is sustainable or 1% is sustainable is in some ways a function of what you have available for budget resources. In this particular fiscal year, people like to forget that Puerto Rico passed a balanced budget that included, that was about $9.8 billion at the general fund level, that included its principal and interest payments. They have not been making set-aside for those principal and interest payments. That's about $700 million that they ought to have been set aside year to date. Their revenue projections versus their actuals are pretty close to being flat year over year, which means that they're actually meeting their projected revenue targets. And yet, they're slightly short on a net basis. They're slightly ahead on a gross basis. But regardless, the point here is that they're nowhere near $700 million short from that revenue target, and yet are projecting to be out of cash by mid-May. This point is not well explained by the Commonwealth. That is, if you have a balanced budget and you strip out your P&I and come back and say, we don't have any cash, why is it that you don't have any cash? Well, in fact, when you start looking across their budget, they have spending targets that they have not met. So in 36 separate budget categories, they've issued contracts that are at least 10 times the budget cap that they set in their authorizing statute in June. Now, Puerto Rico is also in fairly gross violation of something called SEC Rule 15C2-12. That's the rule that requires Puerto Rico to covenant to deliver financial data on a timely basis. And as I say, they have not been able to provide their data on a timely schedule. That makes market participants forced to rely on things like the Conway-McKenzie report and the Kruger report to fulfill their assessment of how much these bonds are worth. It would also seem, just for what it's worth, that Puerto Rico is in violation of the so-called Harrisburg Order. And if you're not familiar with that, that's okay. This is the relevant section, which I won't bother reading to you. But the point of the Harrisburg Order is that in the event that a municipal issuer fails to meet its burden to disclose, the public statements of officials from the municipal issuer become the disclosure that markets are meant to rely upon. And if that information is materially misleading or contradictory, the leaders who have provided that information to the markets can be held liable. In Harrisburg, this of course led to several high-profile prosecutions that are still ongoing. In Puerto Rico, officials have provided a litany of contradictory and incomplete statements to markets over the last several years that seem to be in direct contradiction of the data that they then publish. As I mentioned, the consultant reports are only as good as their inputs. I just want to sort of point out that these reports, of course, have disclaimers on them that mention that they're only as good as their inputs, many of which don't necessarily make sense when matched up against other documents like budget resolutions or even when matched up against their own internal disclosure mechanisms. One thing that I'd point out in this regard is that Walmart is currently suing Puerto Rico for violations of tax law. And in that trial, a variety of internal documents from Puerto Rico have been provided to the court, which the court noted officials from the Commonwealth had marked up because they disagreed with assessments that were made by auditors and by the bank examiner who examines the Government Development Bank on matters of fact. Which is to say that insofar as markets are meant to rely on data disclosed by the Commonwealth and only the Commonwealth that is not independently verified, they are meant to rely on data that the Commonwealth believes is correct, that bank examiners and auditors believe is incorrect. That is a serious problem for folks who are trying to work on Puerto Rico's debt problem. Importantly, it makes it very difficult to know how much Puerto Rico is going to be able to commit to debt service this year or in any future year. It makes it very difficult to know what kind of negotiations ought to take place over any kind of consensual bond workout. And it makes it very difficult for the U.S. Congress to get involved in assisting Puerto Rico with the fulfillment of its obligations to its citizens and its creditors. The other issue is that it doesn't tell us what type of government reform Puerto Rico needs. I agree with Tom here that Puerto Rico does have a crisis of governance more than it has a crisis of fiscal proportions. The official sector in Puerto Rico is unsustainably large, and it is much larger than the $9.8 billion as implied by the general fund. The official budget passed in Puerto Rico is $28 billion, including their public corporations, their federal grants, and their instrumentalities, but it's actually much larger than that. Which I'll get to in just a second. But reducing the scope of the government sector is, in many ways, one of the ways that we can spur growth in Puerto Rico, especially because a shrinking population has left certain segments of the government sector much, much too large. For instance, you'll find that Puerto Rico has more teachers today than it did 4 years ago, despite the fact that its public school enrollment is down nearly 26% in that span. When we come to the size of the public sector, of course, there are disagreements about how you would calculate such a thing. I mentioned that Puerto Rico has a $9.8 billion general fund budget. On top of that, it receives a little less than $7 billion in federal grants that are administered by various agencies. But above and beyond that, it has about $17 billion of federal pass-throughs for things like Medicare Advantage and other types of health programs, as well as some education programs. It has its public corporations, PREPA and PRASA, that have their own budgets. It has its independent agency budgets. And it has public-private partnership agreements that rely on government participation to operate. All told, that sum, as you can see, is something like 75% of GNP. Now, of course, we can debate about what ought to be included in that calculation. But when Puerto Rico talks about having tax-supported debt against a budget base of $9.8 billion, or when it talks about trying to grow an economy that's $7 billion, those numbers ought to be checked against the realities of what goes in and out of government coffers in a given year. It ought to be checked against what is provided by Washington, D.C. in a given year. One of the things to keep in mind here is that Puerto Rico has a massively inefficient government sector. Looking, for instance, at the Department of Education, the ratio of administrators to teachers is 0.93 to 1, which is to say they have almost as many administrators as they have teachers. When you look at what the Office of Management and Budget in Puerto Rico, for instance, has said constitutes an essential service for which they have to leapfrog ahead of bondholders, that would include things like the administration for equestrian racing and sport. Mind you, Puerto Rico has one horse racetrack and also a commission related to the regulation of gaming. So it's unclear why separate agencies have to exist for this sort of thing. It's also unclear exactly why the public sector stands as sharply in the way of doing business as it does. There's been an extensive discussion on this panel, obviously, about labor law and things of that nature. But one example, Puerto Rico has a rapidly aging population and no long-term acute care facilities on the island, 0. If you wanted to start one, you would need 13 separate permits, the median duration for approval of which is 182 days. So in 7 years, you could start your long-term acute care facility and start caring for elderly Puerto Ricans. These are the barriers to doing business that Puerto Ricans face, even though Puerto Rico has a fairly extensive advantage when it comes to things like level of education, access to U.S. capital markets, U.S. rule of law, high levels of technology, high levels of labor education, low crime rates relative to the region, right? And yet, various Puerto Rican companies that have tried to export services to the broader Caribbean or to Central or Latin America have found themselves constrained by the local business environment that has made it more difficult for them to move ahead. Puerto Rico doesn't need a new industrial policy. It needs a new government sector. It needs fewer than 80-something plus agencies getting in the way of doing business. And as they've proven through their inability to disclose in the midst of the greatest financial crisis in their history, it's not clear that their own government can be trusted to deliver that. They need strong external oversight to get there. I want to move on briefly to talk about the other two issues, one of which is pensions. Puerto Rico's 3 pension systems are massively insolvent, and they'll be entirely pay-go by fiscal 2018, according to their actuarial reports that are, in fact, independently verified. Those actuarial reports report that liquid assets across the main retirement system are now virtually exhausted, which means that as soon as July, basically, they'll probably be in a pay-go position. And the incremental pension liability in the general fund is going to be massive. And yet, when you listen to Commonwealth officials talk about pension reform, they say they've already done it, that they fixed the pension system 2 years ago when they passed a bill that made the system solvent through 2019, provided the government made incremental contributions, which they have not made. If you look at a very striking chart from their most recent actuarial report, you can see that these numbers, which are based on the idea that Puerto Rico has made these incremental contributions, which they have not, are quite bad. I won't belabor the actual numbers, but as you can see, the line goes essentially straight up, indicating the size of their liabilities. The point here is that the pay-go pension liability starting in fiscal 2018 and 19 across their 3 main pension systems is about $1.9 billion. That's 21% of what Dr. Kruger has projected is their general fund revenue for that year. That is more than their general fund debt service alone in that given fiscal year. And yet Puerto Rico has come to creditors and said, we need to cut debt, we need to cut debt, we need to cut debt, and we can't touch pensions. It's abundantly unclear why in an environment where Puerto Rico is promoting shared sacrifice, they are not willing to share the sacrifice across their own budget. Importantly, one thing to keep in mind, right, when thinking about the way that we move forward here, is to keep in mind that general obligation bonds are constitutionally protected, right? They are owed the first dollar of debt service that comes into the Treasury, and not debt service, but actual revenues. So when people talk about rule of law, or when they talk about democratic determination, and then talk about imposing a structure that violates Puerto Rico's own constitution that was democratically determined and that has been the rule of law for many years, they're talking about violating a structure that Puerto Ricans themselves determined was the right structure for the handling of their own fiscal affairs. And so it remains unclear to me why a super Chapter 9 or an extra Chapter 9 framework that would allow for the impairment of certain obligations over and above what Puerto Ricans themselves have said ought to be done remains the right course for Puerto Rico. That seems abundantly inobvious when you start to look at the tensions between things like their pension system and their general obligation bonds. The last thing I want to touch on briefly here is the local financial system, and hopefully we can get a little bit into the GDP here. Puerto Rico's local financial system is highly exposed to the crisis. Puerto Rico's national banks are what get all the attention. They are reasonably well capitalized. They were placed into receivership during the crisis in 2008. They sharply reduced their exposures to risky assets and are reasonably healthy at this stage. But Puerto Rico has a separate banking system that is not regulated by anyone on the mainland, called their cooperativa system. These are a ticking time bomb. They hold huge amounts of Puerto Rican debt, and along with local mutual funds, are highly exposed to the crisis. And importantly, the Puerto Rican government passed a law this past year that made it so that these institutions, if they were forced to take losses on their Puerto Rican bonds, did not have to mark those losses to market. So they could go on telling their clients that their balance sheets were healthy, even if their bonds had been cut to something like 50 cents on the dollar. This is a ticking time bomb. It's very problematic. The cooperativas, as you can see, they hold 18% of their assets in central government debt, and the vast majority, or I shouldn't say the vast majority, but about half of that, 47%, is GDP bonds. And so when you think about why...
On my same deal that I did with Ann, you have 2 minutes.
I will be done very soon, I promise. When you think about why Puerto Rico is keeping the GDP alive rather than just sort of turning it into a bad bank and letting it set sail, the reason it's keeping the GDP alive is for two reasons. One is to protect the cooperativas, which will virtually be insolvent if their bonds are haircut even, say, to market value. And secondly, it's to protect payroll. So Tom is correct, right? The reason that Puerto Rico keeps going out of its way to do things like pay GDP bonds, and the reason that they've been unwilling to take haircuts with GDP creditors, even though GDP creditors have put them on the table, is because Puerto Rico needs the ability to liquefy deposits at the GDP, many of which are not government deposits, in order to continue meeting payroll. And so even though the GDP is a terrible legal structure, it's highly likely to be protected going forward. The other issue here has to do with mutual funds, right? Mutual funds have been crushed in Puerto Rico. But the main point here is that the combined market value of mutual funds in Puerto Rico plus the cooperativas is $18.7 billion of Puerto Ricans' outstanding debt stock. So when Puerto Rico talks about protecting regular people by haircutting creditors, they're missing the boat because a lot of those creditors are in Puerto Rico. They are regular Puerto Ricans. They are not wealthy, and they hold some of the riskiest credits in Puerto Rico that stand to sustain some of the strongest losses. If Puerto Rico wants to protect its own people, it's going to have to find a way to deal with its own financial system in a way that doesn't lead to a worsening of the economic crisis. I'll stop there.
Thanks, Daniel. Desmond.
Thank you, Alex, and thank you very much for putting this together. As the last speaker, it's difficult to come up with new stuff, so I thought that maybe I'll talk about another country as well. But before I do that, let me just say that I very much agree with the points made by both Ann Kruger and Brad Setzer that it's very clear that what Puerto Rico needs is some sort of orderly debt structuring. Without orderly debt restructuring, I don't see how they can go forward. I also think that they need some kind of control board. My view is it would need to be a bit stronger than what Brad is suggesting. But the main point that I want to make in my remarks is really relating to the growth item that Ann Kruger mentioned right at the start, because without the growth, I'm afraid that Puerto Rico will just go from one debt restructuring to another if you really can't get that economy to grow. So talking about the other country, I thought that I'd frame my remarks in relation to Greece, basically because there are really very strong parallels between Greece and Puerto Rico. And the story with Greece is that in 2010, Greece should have restructured its debt. It probably would have been able to restructure its debt by 30% and put itself onto a path of sustainability, instead of which what they did is they delayed that restructuring. They tried to contain the budget by a very large amount. And the net result was that in 2012, they had to write down the debt by 75%, and this austerity is leading them to have another debt write down with the official creditors probably sometime later this year. But let me just talk about the similarities between Puerto Rico and Greece and give the reasons why you can learn lessons from the Greek situation. The obvious similarity is both Puerto Rico and Greece are in monetary unions where they don't really have control over monetary policy. They can't depreciate their exchange rate to get competitive advantage. Both of them need primary budget surpluses. To generate that primary budget surplus, if you don't have an offsetting budget policy, what that does is, setting monetary policy, what that does is it moves the economy into recession. The other similarity between the two is that both of them have serious slumps. The orange line is the Puerto Rican economy. The blue line is the Greek economy. So what you see is that over the last 10 years, the Puerto Rican economy has contracted by something like 10%. There's no sign that that slump is changing anytime soon. And if you compare it to what happened in the United States over the same period, the United States economy is growing by 10% at a time that Puerto Rico's economy is contracting by 10%. This, of course, leads to a debt situation that looks to me to be highly problematic, that the debt goes up from something like 60% of GNP in 2000 to 100% of GNP. And this obviously is that if the economy continues to contract, if you get the deflation, what you get is you will get that debt being on a higher path. In terms of the differences between Puerto Rico and Greece, as Ann Kruger mentioned, Puerto Ricans are United States citizens. They can move to the mainland very easily. So you've got this huge amount of labor mobility. But Puerto Rico differs from Greece in that being a territory, it's not a sovereign state. It doesn't have membership of the IMF, so it doesn't have the IMF there to help them get bailed out of their problem, but it does have the U.S. Congress. Just in terms of the population movement, I think that this is really very striking, that Puerto Rico's lost something like 10% of its population over the last 10 years. And as Ann Kruger mentioned, last year, 2% of the population left. What is very disturbing to me is that if you look at the composition of the population, what you see is that the yellow line, which is the population over 44, that proportion of the population is increasing, that the population, the blue line between 25 and 44, that part of the population is declining. So it's very difficult to see how they can grow this economy and how they can be in a position to service the debt. The labor mobility is helping Puerto Rico keep unemployment from being at United States, at Greek kind of levels. That is because most of the population just leaves to go to the mainland, so you don't see that in the unemployment statistics. this chart just indicates another big difference between Greece and Puerto Rico in that, as Brad was mentioning, it's got a highly complicated debt structure. There are as many as 18 different classes of debt. I don't see how, without some kind of legal framework, this can be resolved in a way that's not going to be destructive to both the interests of Puerto Rico and the creditors taken as a collective. Let me just mention that one of the great similarities between Puerto Rico and Greece is that in both places, Alex Pollock's universal law applies. And I think that this is important, something that one really does not want to overlook. It's one of the things that I learned from Alex during his 10 years at AEI, is that if a country is not able to pay its debt, it won't pay its debt. And it's very difficult to get around that law. It's got the same kind of force in my mind as Newton's 3 laws of gravity. And the issue is that if they are estimating that they've got a large gap and the economy is going to contract further on, I don't see how you're not going to have to restructure the debt. Let me just wrap up by just saying, in terms of the specific lessons that one's learned from the Greek situation, is that it really does not make much sense to try to have excessive amount of fiscal adjustment, because what that does is, in a monetary union, it drives the economy deeper and deeper into the ground. It produces deflation, which further complicates the debt problem. And as I've mentioned, delaying the restructuring of the debt is really not going to solve your problem. It's just kicking the can down the road. You're just going to have more debt restructuring further on. So I come to the conclusion that what one really needs is a comprehensive approach to the Greek problem, that much of the discussion that's going on in Congress, to my mind, is focusing on, whether or not Greece needs Chapter 9, whether it needs some sort of bankruptcy framework, whether or not it needs a control board. I think that those are very important issues, but I think that the main issue that is not really being discussed is how do you get this Puerto Rican economy to grow? If we are going to have fiscal retrenchment now, that there's got to be a certain amount of fiscal retrenchment, that really underlines how much more importance there is to the various kind of structural reforms that will get that economy going. There's plenty that Congress could do in that way, reforming the Jones Act, doing something about the minimum wage, giving them some sort of, restoring some sort of preferences that make the island more attractive. The Puerto Ricans need to do much in the way of budget reform, governance reform, all of that. If you don't get that, you don't get the growth. I'm afraid we're just going to see Alex Pollock's law being applied once again, just country not being able to pay its debt, and it won't do so. Thank you.
Thanks, Desmond. Thanks to you all for an obviously very well-informed and insightful panel. I'd like to go down the panel in the same order. Let you make any reactions to other people's comments or additional new things you want to say. Let's say about 2 minutes or 3 minutes maximum. So, Anne?
Thank you. Well, lots of interesting comments made, and many of them I agree with, but I'm going to focus a little bit on the ones I don't. But first off, let me say something none of us has said, but we should have said. Puerto Rico ought to be the jewel of the Caribbean. It ought to be the place where companies that are doing business in North and South America locate, because it would be convenient that way. English and Spanish are both spoken. It has U.S. law. It has the U.S. dollar, et cetera, et cetera. It is not. It is but it is American. And I think there's a foreign policy interest as to how we look to the rest of the world, as well as an interest because they're our citizens. And they're poorer than any other state, any state in the Union. We have an obligation there, too, and I think that ignoring that is a problem, but there's some others, too. I want to repeat what Desmond just said. If there is not a mechanism that permits restructuring, and if Puerto Rico cannot grow, creditors will be even worse off than they are now. It isn't a choice of shall we let them restructure or not. It's a question of whether it can be orderly. If it is not orderly, if it's held up in the courts, as so-and-so, the highway says, creditors say we deserve more than the PREPA creditors, et cetera, et cetera. If that goes on, it will take years, and those are years in which we will continue to see out-migration, probably at an accelerating rate, and the situation will get worse. Their tax revenues will decline because of a smaller population or labor force, et cetera, et cetera. And I think that it's important to bear that in mind. We're not talking about, well, maybe we should, maybe we shouldn't. I think they're going to take a haircut. The question is whether it will be a sensible one with growth or whether it will be an even harsher one that happens cut by cut, so to speak. I do think that the decisions as to what must be done in Puerto Rico have to have a Puerto Rican input. I do believe in this homegrown stuff, and I think it's important that they do their part too. And I do think there is a part for them, and I think if they don't do their part, the growth will be inhibited, just as if the U.S. Congress doesn't do its part, and just as if there isn't debt restructuring. They've got to restore growth, and that has to make a change. There will be chaos if each one has to be done separately. I agree that Puerto Rico has done a terrible job in collecting taxes, but experience worldwide is when you force people out of the formal sector because of the costs of being in it, as has happened there. It's very tough to collect taxes. How do you find out that the maid is working in such a house 1 day a week when it's not reported anywhere? It's not reported. How are you going to do it? In the 1980s, we had something of that problem emerging in the United States as tax rates were so high, and people were finding ways, when possible legally, to avoid them. But I was a member of a club, and we had a doctor and a dentist and this, that, and the other. And, of course, everybody did services for everybody else with no charge. That was avoiding taxes, and it was beginning to spring up much more widely, converting income to capital gains, all kinds of things at that time. Fortunately, our inflation rate went down, our tax rates went down, but Puerto Rico has to have the same kind of thing. There was no municipal property tax increase since 1950s. That's true, but the valuations on the properties have. There's still a problem, and they should do it. We recommended that in our report. But it is not true that they're at 1950s levels of taxes, just to make it clear. I agree with the problems with the GDP. There are problems. I want to point out, however, that Puerto Rico is a U.S. territory. Guess who made the structure with the GDP in it? Rex Tugwell in the New Deal, as one of the many measures where he established, or he had established, many of these government corporations. It is not something that the Puerto Ricans did to themselves. It was done for them. A few more quite quickly. I agree that disclosure of financial data is not good. I do believe that we were given the best they could come up with, and I think that's important. Most of the civil servants that we began to respect and talk to, and even the politicians, were ones who recognized that things were not recognized, and they wanted us to come up. And indeed, one of the less good days of my life was reporting to the governor just how bad things were. They encouraged us to have a press conference because they themselves had been aware of it. Some of it was things like arrears in the individual government agencies. It's very hard to pick up unless you've got somebody in that agency who is constrained to report it. And all kinds of things like that go on there, and they do need a shake-up of the government sector. There's absolutely no question about it, but that's where the Puerto Rican will has to be involved. Quickly, we pointed out in our report, and it's been pointed out elsewhere, the World Bank does a lovely job of producing a report called Doing Business. And they rank countries on all kinds of criteria as to how hard is it to hire labor, how hard is it to fire, how many days does it take to get a contract enforced in the courts, et cetera, et cetera. Puerto Rico came out sort of in the middle of the African countries. Remember that. There's a lot that can be done. I agree with what you said, but I think it's even stronger than that. It permeates the system, and it's going to have to be a fix, and they have to be on board to do it. Finally, Desmond, you said that Greece should have restructured. I agree with you 100%, but Greece should also have done more in domestic reforms, and that's been another part of the problem. And Greece, like Puerto Rico, had to do both, and in fact, it did not do the domestic reforms either. So, in fact, in the Greeks, it was a double problem. Stop there.
Thank you. Brad.
So there's also a tremendous amount that I would like to say. And there are many points where I would like to reinforce my agreement. And there are many points where I would like to debate in great detail certain specifics. But I will try to refrain myself from, and I think I will want to focus on kind of four core questions and points that have come up. One is the question of growth. One is the question of the GDP. One is the question of the audited financials. And one is the question of whether you need something that has many of the aspects of 9, but is not 9. Let's be clear. 9, as it is applied for states, does not provide a big or broad or powerful enough restructuring framework to cover all the debt that needs to be restructured. So it will need to be tailored in some important ways to territories and to Puerto Rico. And I think there is room for a constructive discussion over the details of the rules, who is subject to cram down, and the like. But first, growth. There's a lot of things that you could do. But my strong belief is the single most powerful step that could be done is to extend the earned income tax to Puerto Rico. It encourages work, it rewards formal work. It is a far more efficient use of $1 of federal tax revenue than providing tax breaks to pharmaceutical companies. I am much more attracted to the notion of encouraging people to participate in the formal labor force by increasing the returns to participation than by reducing the returns of participation by lowering the minimum wage. I think if you lowered the minimum wage to, say, $5 an hour, you're still $4 an hour higher than the Dominican Republic, so you still won't get the low-wage business, and you're going to be probably $5 an hour below the going equilibrium wage in Orlando. So my fear is that the Puerto Rican economy, in the absence of a fix on the earned income tax credit, would adjust largely through accelerated outmigration, and that the solution which gets people to want to work in Puerto Rico is to provide the same federal support for work in San Juan that is available in Orlando. That said, there are obvious large gains from reforms that make it much easier to do business, and I think Anne has outlined a range of sensible compromises that would fall short of cutting the federal minimum wage, but would still provide more labor market flexibility in Puerto Rico. Second, the Government Development Bank. You know, I kind of sometimes look at market prices, and I kind of think they maybe have some information. And I kind of think the last time I looked that the Government Development Bank bonds were trading at 25 cents on the dollar, which probably tells you something. And I kind of think Tom outlined what is kind of like the obvious solution to the Government Development Bank, which is to adjust Puerto Rico's law so that there is priority given to deposits and that the Government Development Bank can maintain its role as fiscal agent while allowing for the restructuring of those bonds. I think that can be done with Puerto Rico law legislation. It need not require federal bankruptcy-style fixes. But I also kind of can do a little bit of math, and the Government Development Bank has $4 billion of bonds, and when I read the restructuring proposals that Puerto Rico has put out, there's about $50 billion in tax-supported debt. So I also wonder how you can create the needed framework for managing the $45 billion that cannot be addressed through a change, or obviously addressed through a simple change in Puerto Rican law. Question of the audited financials. You know, it'd be great if Puerto Rico had audited financials, and there's no way to defend the absence of audited financials. Bondholders' interest in audited financials has varied over time. Puerto Rico's inability to produce timely audited financials isn't exactly new. And the famous 2014 general obligation bond was bought by $3.5 billion of sophisticated investors who were explicitly told in the prospectus that there was no current audited financial available for that year. Now, that doesn't make it right at all. It doesn't mean that this isn't a problem that should not be fixed. But I also think it's important to recognize that bondholders were able to make an informed decision, or thought they were making an informed decision about their investment, using other sources of information. And there are other sources of information available. that I think provide a reasonable baseline, not perfect baseline, for estimating Puerto Rico's current fiscal position. And I would emphasize that having the audited financials for 2014 doesn't help us that much in answering the most critical question, which is how much can Puerto Rico afford to pay in fiscal 17, and that we should be focusing much more on reaching agreement on what that needed fiscal path is. Finally, can you restructure without something that has the voting mechanisms of 9 and without having the legal protections during a period of negotiation of 9? I think we agree that you need the voting mechanisms. Maybe not cram down, but majority vote. I do not think it will be possible to reach agreement with the general obligation bondholders on a restructuring that can achieve sustainability before the litigation starts flying. And I think the litigation options available for litigation against the Commonwealth as opposed to against its constituent public corporations held by the GEO bondholders, the Highway Authority bondholders, and the COFINA bondholders are strong enough that the most likely outcome without further legislation is a period of competing and conflicting lawsuits against Puerto Rico and against different creditor groups that makes it even harder than it was in Detroit to come to a fair and equitable solution.
Thanks, Tom.
I don't necessarily agree that Detroit was fair and equitable, but let me go sort of one by one here, okay? Different buckets. The GEO bonds have a constitutional status, and I understood Brad to say that they would get a vote, and our position. And we are not large holders of the 2014 issue. We bought almost all of our GEOs prior to 2014. In fact, it is one of the historical oddities that the holders of the 2014 bonds are the most fervent proponents of Chapter 9 for Puerto Rico, because it applies to everybody other than them. So we are not far apart on that. My people are not interested in creating a holdout problem. With respect to the COFINA bonds, which is the next biggest piece, the COFINA bonds are secured by tax revenues. There's nothing that Chapter 9 under its own terms can do for that, and there's nothing that federal law can do for that because we have something called the Fifth Amendment to the Constitution. That's the COFINA bondholders' collateral. You can't take that away from them. Various people have suggested that those bonds are in some way illegally issued. That is entirely an issue of Puerto Rican law subject to Fifth Amendment, 14th Amendment regulation. And all I can say is that those bonds were issued under legal opinions from the top legal officers of administrations in both statehood and Commonwealth parties, and were routinely sold as the safest bonds in the Puerto Rican structure. So in terms of federal law, the COFINA bonds are protected by the Fifth Amendment of the Constitution. And with respect to the instrumentalities, I've already talked about that. Those, again, have revenue streams that are pledged to bondholders. They are, again, protected under the Fifth Amendment. So when one talks about we want a general restructuring statute that takes everything and mushes it all together, that doesn't work legally unless Treasury is prepared to take the position that because a territory has issued these bonds, the Fifth Amendment and 14th Amendment doesn't apply to the rights of their bondholders.
First of all, I can't speak for Treasury, but second of all, the key question is whether or not and how the clawback and the exemption from clawback applies to these pledged revenue streams. And that litigation makes the security interest somewhat less strong.
Which is a matter entirely of Puerto Rican law and, as I said previously, flies in the face of every legal position taken by multiple governments of Puerto Rico.
Thanks, Daniel.
Just like everybody else, I think I could sit here for a while and debate lots of things, including the security of those COFINA bonds. I probably agree more with Brad than Tom on that. But I want to make 3 points. The first is that Puerto Rico is one place where structural adjustment is significantly more impactful, in my view, than fiscal retrenchment, which is to say that when you look across Puerto Rican government programs, I think it's pretty clear that the multipliers on those programs are sharply below 1. And I think it's pretty easy to demonstrate that with data. So if you were to leave the size of the government sector unchanged, but deploy resources in the government in a significantly more effective manner, I think you would have a significantly different economic outlook than you have today. The second thing that I think feeds into that is the way that Congress thinks about allocating assistance to Puerto Rico, because many of the things that Puerto Rico has asked for, like the Earned Income Tax Credit or Medicaid assistance, I think need to be tailored in a way that actually encourage the type of positive results that some of this panel have argued for. So, for instance, with the Earned Income Tax Credit, given the fact that about 80% of Puerto Rican households by income limit would be eligible, I think you need to find an equilibrium that incentivizes wages to rise rather than incentivizing employers to take a sharp federal subsidy in perpetuity. Remember that the big difference between Greece and Puerto Rico is that Puerto Rico gets about a third of GNP in fiscal transfers already. The same is true, I think, with Medicaid. It's a little strange to me that there's been such a focus on Medicaid and not a focus on things, for instance, like Medicare Advantage or Medicare Part D, or, frankly, in liberalizing the healthcare system in Puerto Rico, given that the overwhelming majority, something approaching 90% of Puerto Ricans, receive federal healthcare benefits. And then finally, on sort of bankruptcy and model governance, I think that they're two sides of the same coin. I think a strong federal control board is extremely necessary to help model for Puerto Ricans the way to make difficult political decisions and the way to reform their government sector, including doing things like producing timely financial data. I also think that it's essential to help them reform the GDP, which they currently use as sort of a liquidity tranche to borrow money across the government on a sort of month-to-month or even week-to-week basis. That's one reason that sort of bad banking the GDP and letting it walk away is very difficult for the Commonwealth, because at the moment it subsidizes its operations based on the cash flow of its corporations, which makes it very difficult for the Commonwealth to continue as a going concern, which is what its auditors are concerned about, if it doesn't have access to GDP funds. And then finally, it's not clear to me that the case has been made that Puerto Rico needs to violate its local constitution with some sort of extra bankruptcy framework or territorial bankruptcy framework, which, by the way, Guam and American Samoa, which are also U.S. territories, don't want and have said as much. And importantly, I think the right approach is similar to the one taken in Guam and taken in the USVI when they had fiscal crises, where Congress incentivized them to respect the rule of law and find adjustment internally. That's not to say Puerto Rico doesn't need bankruptcy access. I think it does. I think it's clear that a significant portion of their debt needs to be adjusted. But I think violating the local sovereignty of the Puerto Rican Constitution to get there has not been proven well on financial grounds or legally.
Daniel, would you take one more minute to answer a question for me? You discussed very interestingly the local financial institutions, these cooperativas. Did I understand correctly that it wouldn't take much of a haircut on Puerto Rican debt, government debt, given the large amount that they hold? Basically, they're taking deposits from the local Puerto Ricans and funneling them into government debt. Is it right to think it wouldn't take much of a haircut in order to make all of these local financial institutions insolvent? Is that a fair conclusion?
It's a reasonably fair assessment. What my cooperativa chart did not include was short-term liabilities owed to the Commonwealth, which are substantial and have grown markedly in the last 7 months or so as these cooperativas have been forced to lend. If you take just the market price at which these bonds are trading and apply it to the cooperativa assets, these banks would be insolvent.
Thank you. Desmond.
I'll just limit myself to 2 points. One, just picking up on that point about the vulnerability of the banks. If you're worried about Puerto Rico, you certainly should be worried about the European economic periphery, where the Italian banks are loaded with sovereign debt. So, we better just hope that we don't have another recession in Europe, because we'll really see that connection playing out. The only other point I want to make is that I couldn't agree with Anne Kruger more that part of Greece's problem was that it didn't really pursue structural reform in a serious way. And I didn't in any way mean to suggest that in Puerto Rico, debt restructuring would be a substitute for structural reform. Structural reform really is the key. That you really have to put Puerto Rico on a rapid growth path, both for the interests of the Puerto Rican residents as well as for the creditors.
Thanks, Desmond. Since you have mentioned sovereign default, I just want to say I've been looking at some sovereign default numbers lately. In the last 100 years, we count over 180 defaults on sovereign debt in the last century, of course, continuing right up to today, which if you ever thought of sovereign debt as risk-free, this might cause you to think again.
Is that why the Basel folks had all sovereign debt with zero reserve?
I think that is. Yeah, I think that's why.
Including, by the way, municipal debt issued by instrumentalities of the United States. That's the reason why European banks bought Detroit paper.
But Alex, you might have also pointed out that even though you had those 100 defaults, sovereigns didn't take too long to re-access the international capital market.
It always happens. Now, ladies and gentlemen, we're going to open the floor to your questions. Let me remind you how this works at AEI. Please wait for the microphone to get to you. Tell us your name and your affiliation and ask your question. If your question is prefaced by too long a comment, the chair will remind you like this that it's time to come to the question. The younger gentleman in the middle here, please.
Bert Ely, thank you very much, Alex. And I think this has been a great program, very thought-provoking. A quick comment and then a question primarily for Dr. Kruger. As we talk about parallels with Greece, as I sit through this conversation today, I increasingly think that maybe a better parallel is with East Germany. And with the challenges that West Germany faced in integrating East Germany back into the German economy once the Berlin Wall collapsed. In a sense, East Germany was a failed political state. And the more I listen to what I hear today, that Puerto Rico is a failed political state, particularly with regard to the comments with regard to the poor governance in Puerto Rico. So my question is this. Is possibly Puerto Rico reach a situation, or will soon reach a situation, where it needs to be put into a political trusteeship by the United States government? That we have to abandon a lot of notions of how government ought to work in Puerto Rico, recognize that it's not working, and have the United States Congress do a fundamental political restructuring of Puerto Rico, which has to be has to precede any meaningful, sustainable economic recovery.
And you want to take a try at that, then we'll let anybody else take it too if they want to.
Sure. First off, the political reaction within Puerto Rico to any move even remotely resembling that would, I think, be so negative that it would doom any efforts to reform. You can't do things with the Puerto Rican government without somehow involving the Puerto Ricans, and I suspect that I think that even those in Congress who are pushing and everybody else who wants to see things work out in Puerto Rico recognizes that there has to be a Puerto Rican voice in it. Much of what's happened in Puerto Rico indeed has been a function of the not the politicians per se, but the voters choosing the politicians who will do these things. So I think it has to be a recognition within Puerto Rico, too. The second difficulty is, of course, that the East German actually acceded to West Germany, so it became one government. It was not a separate government. They felt themselves to be German, but there was a tremendous mistake made, at least in terms of economics, if not politics, and that had to do with the choice of, quote, exchange rate at which they went in, which led to a very long period when there were outmigration of East Germans to West Germany, et cetera, and that proposal, even if it could be undertaken, which I think we could try this other thing we're talking about first, get the debt restructuring, get the Puerto Ricans on track with a control board, but with Puerto Rican assent to it. And I think there's much more likelihood of that than there was in the past. But certainly that offers hope for Puerto Rican buy-in in a way that I think the accession to statehood, which is basically what you're proposing, I think, would not be.
Anybody else? Yeah, Tom.
Yeah, we should be careful about slinging around the word territory. Okay, technically, Yes, Puerto Rico is a territory, and exactly what that means and whether a commonwealth is different from a territory is an issue that the Supreme Court will decide in the next couple of months. In 1952, Puerto Rico's position was that it negotiated a treaty with the United States that made it a commonwealth, and on the basis of that treaty, Puerto Rico was deleted from the list of colonies administered by the United States before the United Nations. Dr. Kruger is correct. This is an issue of considerable international embarrassment for the United States. So my people also believe that a control board is necessary. We believe it needs the power of the purse and not much more, although the power of the purse can be used in ways to create better governance. But I would urge people not to look at this as an exercise where Congress steps in and just runs Puerto Rico. I don't think that has a prayer of political success on the mainland or in Puerto Rico. The Puerto Ricans will resist it mightily, and they will be right.
Take a comment from Daniel, then we'll take another question.
Yeah, I want to point out that I tend to fall on sort of needing the stronger control board rather than a weaker one. But one thing I'd mention is that politically, the majority party in Puerto Rico has an approval rating that's in the low teens. The minority party has one that's in the low 20s. And Congress has one that's in the low 60s. Right? So politicians are complaining loudly about the notion that a control board may be coming to Puerto Rico. It's not exactly clear that their populace is behind them in those remonstrations.
Question back here.
Hi, Pat Spann. I just puzzling found out today that I'm a client of Mr. Mayer's as a
Technically a shareholder of a client, but yes,
okay.
thank you.
As a retired federal employee with owning Franklin, Virginia tax-free bond funds, I was surprised to find out that about 9 months ago, 5% of the holdings was in Puerto Rican bonds. I noticed a couple months ago, the latest thing I got was down to 3.5%. And my question is, what is it? What's the worst case, or what's the most likely outcome for someone like myself, an owner, a Virginian, an owner of Puerto Rican bonds? Are they just going to go to zero or some percentage of zero? I'm a little curious. I know I actually called both my senators to enlighten the staff that Virginians do have some interest in this.
Thank you, Tom.
I wish I could promise you a result. My view is that your bonds, and again, I need to check exactly which bonds your fund holds. Franklin holds across about a dozen different issuers. And some of those bonds should do very well, and some of those bonds are under considerable pressure. So I can't really address what's going to happen to your bonds. But I think that the bondholders of Puerto Rico deserve and will obtain, assuming a stable legal framework that respects the rule of law, they will retain a good recovery, because I think that's the right thing to do, and because I think if they get really expropriated, and there are some proposals I've seen that come close to that, then Puerto Rico will not return to the tax-exempt markets of the United States. And that will be very damaging for any future recovery prospects of Puerto Rico. So I think I'm cautiously optimistic. That's about the best I could do for you.
Anybody else want to make a prediction on average for American mutual fund holders that have Puerto Rican bonds in them? Brad?
I won't make a prediction on average, but I'll make a couple of observations. The first observation is that the bulk of the tax-supported bonds, so the Puerto Rico law general obligation bonds, the COFINA senior bonds, the highway bonds, all trade at about 60 cents on the dollar. So that implies that you've already, assuming the bond fund has been marked to market, taken a substantial loss, and there is a possibility that the recovery could be close to that. Personally, I would say it might be a little bit lower, realistically, at least in the short run. But I would note that a lot depends on the restructuring terms and how capital markets evolve over time. One proposal, the proposal out there right now, would create new bonds, much reduced in face value, with a coupon of 5%. 5% is a quite attractive coupon in the current global context, and in a good scenario, over time, a 5% coupon promised over 30 years might be worth well over 100 cents on the dollar. So you could imagine in a good state of the world, initially seeing a fall, but then over time, as people gain confidence that Puerto Rico will be able to fully pay its restructured debt, and as Puerto Rico's economy regains its footing, you could imagine getting some of the losses back.
But just to be clear, the new 5% bond is going to have a principal of maybe 60% of the old bond, right, or some number.
So,
Yeah.
my point being that 60% at 5 over time may eventually be valued at 70, but in the short run, it might dip to 50.
Well, I don't have 30 years. But
Alex?
Desmond, yes.
Yeah, I would just make 2 points. You know, I don't know exactly where Puerto Rican bonds are going to go, but I would just say as a cautionary tale, the Greek private debt restructuring involved a 75% present value write-down in the debt. The other point I'd make is I understood that the Puerto Rican offer that they've made their opening bid involved a 46% write-down in the debt. So I'm not sure how we get to a very favorable.
No, wait. It's
figure.
40. You're taking a whole bunch of tranches, and some of them are going to do a lot better than 46%, and some of them are going to do a lot worse than 46% within the structure. I'm going to be cautious here. Real, I wouldn't even call them real, preliminary negotiations on this structure. Well, Puerto Rico initiated them about maybe a week ago, and the details are not public. But you can't just take the 46% haircut and say to somebody, you don't know what bonds he has, and you know.
I assume he's got an average portfolio of the bond.
No, I wish things were that simple. Different bond funds acquire bonds at different times. These are bond funds that mostly buy on issuance, so different things get issued at different times. To take, what's a good example? I mean, there are highway bonds that are secured by tolls that are explicitly not subject to clawback, and assuming that the Fifth and 14th Amendments have any application to this, those are money good. So he has all of those. He's going to recover 100 cents. If he holds subject to appropriation bonds, as one of the panelists made a comment, there's a position that those bonds will never have appropriations made to pay them, and you know, Puerto Rico might take the position they're going to get zero. You can't tell how he's going to do until you know what his portfolio is.
All right. I have a question up here. It's been waiting. Wait for the microphone, please.
Yeah. My name is Li Yang. Thanks for your presentation. I just wonder if you can deliberate from a different angle. You know, when I say that debt means somebody, maybe you have to plan ahead. You want to get some investment revenue so you can pay back, or you can have additional revenue that you can get so you can get back. So why the country or territory who have to go into the deep debt but cannot pay back? So the basic question may be, say, will they get the money or somebody misled them to borrow the money, and then those money are diverted to benefit a few rather than general public, and the general public who are not protected, so they cannot even get a job, and their wealth are all somehow disappeared. So I just wonder, just like in Africa, can you really say, what's the basic cause, and can you cancel the debt?
Okay, what's the basic cause? The fact that you borrowed the money and it's not there. So what are we going to do?
Well, I'll say one thing. For decades, Puerto Rico did a fairly good job, although not a great job, of borrowing for infrastructure, like most municipalities, most healthy municipalities, I should say, do. And this is why they were able to accrue highway bonds and transportation bonds and water bonds and so on. And for most of the last decade, they stopped borrowing for infrastructure costs and borrowed instead for general deficit financing. And the difference, of course, it has a lot to do with the way that permanently affects your economic trajectory. And so Puerto Rico was not only in a period of secular stagnation, but they were also using their borrowed capital markets cash to drive themselves deeper into the hole. It's one of the reasons this is so unsustainable.
Thanks. Okay, go ahead.
I want to make a comment about Mr. Pollack's law. I would distinguish between it as follows. In the sovereign debt restructuring area, those who cannot pay will not pay. If you enact Chapter 9, the rule is those who will not pay will not pay.
And I will just note that's somewhat unfair.
We'll, in future renditions of the law, we'll note these potential additions. I wanted to say on Daniel's point that the process that he just noted of going from sound long-term borrowing to create long-term assets which generate growth to going to borrowing which goes into financing current expenditures and deficits is precisely the trajectory of troubled municipalities like New York City was, like Detroit was or is, and many other cases, of course. I had a question over here. Yes. Thanks.
Thank you. I'm Ann Canfield, and I have my own firm here in Washington. First, a general observation. The Zika virus has hit Puerto Rico, very unfortunately. So I think that's going to have an impact on its growth potential until a vaccine is developed, which is 2 to 3 years away at minimum. But then secondly, it looks like, with the legislation that's being considered on the Hill, and Congress is, it's going to take a little bit of time at least to get that through, and you've got some pretty significant debt payment dates coming up on May 1st and then July 1st, where I guess the wheels really come off the bus. It looks to me like there's going to need to be some sort of short-term bridge mechanism put in place here, and if it is that, and if it does come from the Treasury, how much money are you looking at?
Now we have to say that's not Brad anymore. How much money would one be looking at?
Right, exactly.
Okay. Comments on that? Brad, you want to try?
Sure. The point about the Zika virus is a very good and very important one. I think it reinforces, while there's an ongoing debate in this country about the size of government, we do need a public health system to prevent contagious viruses from spreading and limit their spread. And that is an important, vital role of government. You can also imagine some other shocks that will hit Puerto Rico in the near term that will make it harder, not easier, to get out of the crisis. The evolution of our relationship with Cuba could have some impact on tourism. And the need to put more money into the pension system makes the fiscal problems get worse rather than better in the near term, which is all reason, I think, to be cautious in making forecasts about Puerto Rico's near and long-term capacity to pay, and to make sure that debt restructuring isn't the prelude to another debt restructuring, that it really puts the problem behind Puerto Rico, and obviously that takes reforms as well as restructuring. What does it take to get past July 1st? The easiest option, and it's not an option that many on this panel will like, is to provide a stay on litigation so that Puerto Rico doesn't have to make the payments. And that stay could be for 6 months or 12 months, so that the new elected government in Puerto Rico would have time to reach agreement with its bondholders. Now, you could do that without putting it in a broader Chapter 9 framework, or you could do that as part of the Chapter 9 framework, a modified Chapter 9 that applies to the Commonwealth. That would avoid any use of taxpayer dollars. A loan, which I do not think, based on the public statements, would ever be made available unless Congress decided to authorize it, would need to be, I think it's about $2 billion. Maybe you could get by with a little less. But the easiest solution is a period of protection from litigation and then negotiations over new restructured terms.
Anybody else? Daniel?
Yep. The U.S. Treasury has proposed $2 billion plus for combating the Zika virus out of the CDC, a significant portion of which, several $100 million, would go to Puerto Rico specifically. That seems prudent to me, and sort of independent from part of this discussion. Congress is debating that now. With respect to sort of liquidity and bond payments through the duration of this year, I'd say two things. One is that it's not clear to me how bankruptcy helps that unless it creates some kind of dip mechanism. Puerto Rico is going to have liquidity problems on a go-forward basis unless it can somehow clear enough cash out of its budget in the first part of the fiscal year, because they take in so much money through income taxes in the back part of the fiscal year. But it's actually that same point that leads me to believe that Conway McKenzie's liquidity projections that show them in a negative cash position in the fourth quarter of their fiscal year are so bad. Historically, they've run very large surpluses in the fourth quarter. They have budgeted repayment of money to various government funds in Puerto Rico as part of that. They've also budgeted a variety of what you might call discretionary projects in the fourth quarter. I think their May and July payments are going to look a lot like their January payments, which is to say that they go out of their way to respect the constitutional priority of debt, and they let everything else get paid out of existing debt service reserve funds to the extent that they exist. And whatever is not covered by one of those two avenues defaults. But if that happens, it's not obvious to me that absent pension shocks that are coming and healthcare shocks that are coming, that Puerto Rico has a massive solvency problem, so much as it has a intra-year liquidity issue.
We are out of time. As much as we'd like to keep talking about this, I have just one quick question. Is it, speaking of the government employees' pension funds, is it true to say that they're virtually 100% unfunded?
Pretty close.
Close to 100%, so virtually no funding against the 44 or so, whatever it is, $1 billion. All right, well, on that cheery thought, ladies and gentlemen, let's show our appreciation for a really great panel. And thank you all for coming.